Welcome to today's deep dive into the simplest day trading strategy for both beginner, intermediate, and even experienced traders. Now, as a beginner trader, what is your goal? Let's break it down and keep it really simple. The goal for most of you is to try to pull profit out of the market on a consistent basis. And this is a goal that is very elusive and very hard to achieve, as you probably already know. So what I'm gonna do in this episode is I'm gonna give you a case study of some of my trades from today. Now, today was a particularly exciting day because I'm actually up over $100,000 in one day, in just 3 hours trading. And you know, a lot of people might think and assume that in order to make that kind of money, I must be some kind of math whiz. Maybe I went to some really great business school, or I'm using some really complicated technical indicators or high frequency trading algorithms. None of that is the case. I attribute a lot of my success to the fact that I keep it very simple. But clearly, there's a difference between having a day where you're up $100, having a day where you're up 1,000, having a day where you're up 10K, and having a day where you're up over $100,000 like I am this morning. Now, I'll show you my P&L so you can see right here, $100,176.35, and that is real money. Now, I do recaps every single day, whether it's a red day or a green day. So you guys who have been tuning in for a while, you know that I'm not just showing off a big green day here. I put it all on the table for you guys to see. But I should probably mention that my results are not typical. I have been doing this for a long time. I don't know if I introduced myself, but my name is Ross Cameron. I'm a full-time trader, and I funded my first account in 2001, just after the dot-com bubble, which is when I first got really interested in the market. The success that I've had is based on following a very simple strategy. And today, when I sat down, I approached the market the same as any other day. So how does a trader go from $10 a day to 100 to 1,000 to 10,000 to $100,000 in one day? You wanna know what my goal was when I first started trading, my daily goal? It was $200 a day. That was it. $1,000 a week, $52,000 a year, which means today I just made 2 years of trading profit of my original goal in about 3 hours. And that's because I've gotten to a place where I've been able to scale up my strategy. For you guys, many of you, you're starting at the very bottom. So I want to scale it back down and show you what it looks like sort of on the first step, the first rung of this ladder. So when we talk about daily goals, this is the way I break it down for most of our students at Warrior Trading. I say, I want you to focus on base hits of 10 to 20 cents per share. Per share. So that means if you're buying a stock at $7, you're selling it at $7.10 or $7.20. That's a base hit trade. So let's use 10 cents per share as the example. So to make $10 a day, 10 cents a share, that's 100 shares. And for all beginner traders in our simulator at Warrior Trading, I encourage you guys to trade with 100 share blocks. And you know what? I have a student, his name is Danny. He's got his 100K badge right now, and he's putting in his paperwork for his 500K badge. And Danny is a student who began trading focusing on really small share size and a daily goal of $10 a day. $10 a day. That is not a lot of money, but he knew something. He knew something I taught him, which is that he was proving the proof of concept in his strategy. He was proving consistency, he was building a track record, and he was doing it all with the stakes being really low. And clearly he's been able to scale that strategy up. Now I'll say, as always, his results are not typical, as aren't mine. I want to always put that out there because trading is risky. But we start with this goal of 100 shares, $10 a day, and then we start scaling it up. So you want to make $100 a day, you start trading with 1,000 shares. You want to make 1,000 a day, you start making your way up towards 10,000 shares. Now, if you want to make $10,000 or $100,000 a day, this isn't about taking one trade with 100,000 shares or one trade with 1,000,000 shares. Now we've got to do something a little different. We stay with maybe 10,000 to 20,000 shares, 10,000 to 20,000 shares, but we start increasing the quantity of trades from one trade a day, maybe 3 trades a day, to now you're doing, 10 to 20 trades a day. And on a day like today for me, 25 to 100 trades a day or more. And this is how you scale up the strategy. I'll tell you, for me, I learned everything the hard way. I'm self-taught day trader. I didn't learn from someone else. I didn't have someone that gave me their strategy and I was able to learn it. For me, I seem to insist on learning things the hard way. And maybe you're the same way. I think a lot of us who come into trading are independent thinkers and we want to do it ourselves. We want to figure it out ourselves, get our hands in there. And we're not as likely to follow the directions of someone else. So I hope that just you by watching this video are taking a step towards learning a strategy that someone else is currently trading, because you do not have to reinvent the wheel. So as I was going through my journey of learning how to trade, I kind of made all the mistakes in the book, including not trading the right stock. So one of the first things I want to do in this episode, I want to teach this class as if you're a good friend who's come to me and said, Ross, I want to figure out how to trade. And so at its core, as traders, we're trying to extract profit from the market. And we, of course, only make money when we're trading something that is moving. We don't buy something at 5 and sell it at 5 for a profit. We buy something at 5 and we'd like to sell it at 5.10 for a 10-cent winner, maybe 5.20, 5.30, maybe 5.50, a 10% winner. That would be great. Okay, so if we're looking for that type of volatility, you know what? The most important thing we can do to reduce our risk as traders is to make sure we're trading the right stocks every single day. And that's where we're going to begin this episode on stock selection. And you're going to get an understanding of why I chose the stocks that I traded today. So this is the actual scan from today, from about 11:45 this morning. We had 7 stocks up over 40%. So each one of these stocks by themselves would be the right type of stock to at least look at, because clearly they're volatile and they're moving. So it meets sort of criteria number 1 of volatility. But one of the things that I've learned over the years through trial and error and making a lot of mistakes is that I typically don't make money on higher priced stocks. What I found was that when I tried to trade higher priced stocks like Apple or IBM, Netflix, really anything that's higher priced, is I would just continually get chopped out. And I realized that, you know what? Typically, those types of stocks don't go up 20, 30, 40% in one day. They're moving in more narrow ranges. They're dominated by high frequency trading algorithms and institutional traders and hedge funds, and little guy retail traders like us. There's not a lot of opportunity to make what I felt was consistent profit. So kind of based on my own experience, I realized, well, you know what? I got to just eliminate some of these stocks because they're going to be too expensive and it's not going to work. Now, there's a couple other things that I am going to walk you through, but just at the very top, I look at this and I say, well, I'm not going to trade this stock. It's $90 a share. That one's off the list. This one's 21. Maybe I could consider it, right? But I notice here something else. The float's a little too high. And so, in fact, what we're going to start to lay out is the profile of the right type of stocks to trade. And so, number 1, we're going to focus on stocks with a price of preferably between 2 and 20. Now, you might say, gosh, that sounds awfully arbitrary. This is nearly $14 million in gross profit. And this is the area, the price range of stocks where I make the most money, right in here. So you can see below $2 right here, I make money, but not a lot. Above 20, yes, I make some money, but not as much. So if I'm going to focus on the area where I'm most likely to do the best, it's going to be right in here. Stocks between $2 and 20. Now, I want to give you some recommended reading at the end of this episode, but one of the books that I'll share with you is this book called Thinking in Bets by Annie Duke. One of the things that she says during this book is that when she was learning to play poker, she's a professional poker player, she learned from her brother, and her brother told her, these are the hands that you'll play. And he gave her a set of hands that she should play every time she got those cards. And he said, don't play anything else. And she said, well, wait a second. I keep seeing other people who are playing, a different set of hands and they're doing well. And he said, yeah, they've been doing this for a long time. You're a beginner. These are the hands that have the highest probability of success. These are the only ones that you should play right now. And so I sort of think similarly for a beginner trader, this is the only price range that you should probably be considering. Certainly if you're trading the strategy that I trade every single day. Yes, do I make some money on low price stocks? Occasionally. Higher price stocks? Occasionally. But the risk is higher, and this is really the sweet spot. So let's write it down. Between price 2 and 20. So now, again, if you're a friend that I've known for a really long time, we're just starting high level. The type of stocks that we're going to be looking for each day are stocks between 2 and 20. And you might say, well, why is it that you make the most money on those? And what I would say is that stocks of this price range, because they're cheaper, they can make larger percentage gains. Think about it. A stock can go from $2 to $4 in one day easily. We see it all the time, and that is a 100% move. For a stock to go 100%, that's $20, it needs to go from 20 to 40. That's not such an easy feat. I mean, that really is not an easy thing to have happen. So realistically, while yes, you could have a stock that goes from 20 to 40 in one day, and we've seen it happen in the case of GameStop and some of these other high-priced stocks, it's just not something that you can expect on a daily basis. And yet, these lower-priced stocks, we see it really all the time. So I'm going to put the slides back up here. So our first order of business is to try to find stocks that fit the criteria of having the potential to make a big move. And so my strategy broken down into 5 steps. The first step is to use a stock scanner. This is a piece of software that searches the entire market for stocks that are making big moves. And so I have to tell that scanner what to look for. That's the challenge that a lot of beginner traders face is they might have a scanner, but they don't know what to tell it to look for. So we're going to start by looking for stocks priced between 2 and 20. Okay, so there's over 10,000 stocks in the market, and if we filter just between 2 and 20, yes, we've narrowed down the list considerably, but there's still certainly over 1,000 stocks on that list. We need to narrow it down a little bit more. And so what we're going to do is we're going to look at a little bit more of my metrics here, and these are going to help you better understand where I perform the best so we can add some more filters. Okay, so now if we scroll over here to instrument, this is the specifics. These are the individual stocks I've made the most money on. And what we're going to learn here is that number one, I do the best on stocks that have high relative volume. You'll see right here, this is clearly sticking out. Obviously, I don't make money trading in this area. So what is this exactly? This is a stock that has 5 times higher volume today than is average. So relative volume should be 5x or higher. Relative volume is the amount of volume a stock has today relative to its average volume. Now you could use an average over the period of 7 days, 14 days, 30 days. I prefer a longer average, and really regardless of what time period you use, as long as it's 5 times higher than its average, you're probably going to be in pretty good shape. So now let's ask ourselves, if a stock has 5 times higher volume and is priced between 2 and 20, does that tell us right away that we want to trade it? Well, not exactly. There's a couple more things we want to look for. I want to make sure that the stock is up. It can't be down on the day. If it's down on the day, I'm really not interested. So it's got to be up. Well, how much should it be up on the day? So let's go ahead and scroll down a little bit further. In fact, the stock should have the potential to go up at least 10% while I'm in the trade and should be up at least 2% on the day before I even take the trade. That means it's gapping up. All right, so I'm going to say it needs to be up at least 10% as a minimum, because I find that this is where I see the juicier returns. Now, in order for a stock to be up 10% and to have 5 times higher volume than average, what's driving all of that? News. There has to be some type of catalyst. So the news catalyst is the event that brings in the volume that then results in the rate of change. And again, technically, you could have a news catalyst, and you could have rate of change on a stock that's $200 a share, but you're not going to end up seeing a 3, 4, 500% move in one day. So if we're really focusing on the type of stocks that have the potential to make the biggest moves, we got to be focusing on that price range. All 3 or 4 so far of these criteria have to be in place. So all of this to me represents potential characteristics of demand. A stock priced between 2 and 20 will naturally have more demand among traders than a higher priced stock. A stock that has 5 times relative volume today clearly is exhibiting demand. A stock that's up 10% has demand. A stock that has a strong news catalyst will have demand. Now, there's another part of this equation. We've got what and demand? Supply. So in order to have an imbalance between supply and demand, let's think about this. In order for a stock to go from $2 all the way up to 3, and all the way up to 4, and all the way up to 5, there has to be an imbalance between supply on the one hand and demand. If the stock went up and then immediately people are selling, the demand is offset by the supply. People selling is supply. And so then the price comes right back down. And that happens sometimes. Sometimes the price of a stock will go up 30% and then come all the way back down. So yes, there was a short-term imbalance between supply and demand. The price went up, but then it came back all the way down. It was fully corrected. And typically that happens when the underlying news catalyst isn't very strong, or when there's a lot of insiders that suddenly see, wait, I'm up 30% on the day, I'm gonna sell some of this stock. And so what we look at when we're thinking about supply is the number of shares available to trade. And that's called float. So float, right here, these are the number of shares the company has issued and are available to trade. And in the current market right now, the floats that have given this the biggest return have been stocks under 5 million shares. However, as a general rule of thumb, I typically say I'll focus on anything with a float of under 20 million shares. But realistically, under 5 million and even under 1 million, you could kind of weight these where maybe this is worth 1 point, this is worth 3 points, and this is worth like 6 points. Just if you were going to do like a scoring mechanism of some type. In terms of weighting, a lower float is going to have the potential to move exponentially higher. So when we're talking about that imbalance between supply and demand, float is very important. On the demand side, we have a number of different elements. We have price, we have the percentage change on the day, we have the relative volume, and then we have the news. On the supply side, there's only one element. It's the number of shares available to trade. So let's jump onto the whiteboard here for 1 second. What I want to show you here is an example of 2 different stocks. So we're going to have one stock that goes up 50%, let's just say, for example, or we'll make the numbers easy. We'll call it 100%. One stock goes up 100%, and it goes up 100% with a float. So this is the percentage change with a float of, let's say, 10 million shares. Let's just say, for example. And the total amount of volume on this stock is, let's just say, also 10 million shares. Okay, so you've got 10 million shares of volume, you got a float of 10 million shares, and we're up 100% on the day. So this is the change, this is the supply, this is the demand. So what if we change these around? What if this is a 10 million share float, but we only have 1 million shares of volume? How should that correlate to the percentage change? Well, it's only 1/10 of the demand. So it might only be up 10%. Well, what if we do it a different way? What if we say it's a 10 million share float, but it has 100 million shares of volume? That's 10 times the demand. Could that actually go up 1,000%? And I'll tell you, you might not think it's possible, but I've seen stocks go up over 1,000% in one day. I think maybe one of the highest moves in one day was 4,000%, which is unbelievable, almost unthinkable, but I've seen this type of thing happen before. Just a couple weeks ago, we had a stock that went from $2 a share in the morning to a high of $60 a share. Holy smokes, that's an incredible move. 3,000%, something like that. Just almost unbelievable, but it happens. Or inversely, so this might be a little harder to achieve, 100 million shares of volume. That's a high level of demand, no question about it. So what if the float goes down? What if we have a 5 million share float, just for instance, and we have 10 million shares of volume? So now we've got half the supply and same amount of demand. That's a 200% move. What if we have a 1 million share float and 10 million shares of volume? Now we're back to a 1,000% move. Now I'll tell you, this isn't an exact science where you could put in this equation and if you see a stock with a 600,000 share float and 12 million shares of volume, that it's going to equal this percentage change. But there is a clear relationship here between float, demand, and the percentage change. So let's look at a chart today of an actual stock that I traded, just to get a little perspective. So the stock that I traded today was BTCT. This stock has a float of 2.18 million shares. So let's start to fill out just sort of how this stock fits in on our supply and demand criteria. So we're gonna look at BTCT. And the price on this one this morning when I took my first trade was $10. So right in between our kind of wheelhouse. The relative volume on this stock today is 6.07. It's high and above 5, which is good. It's currently up right now 72%. The news catalyst is the price of BTC USD. So price going up, BTC USD. And then the float on this is 2.18 million shares. And now we can add just another column of data here, the volume, let's add 2 more rows. So let's add, I'm going to take this out here. We're going to add volume today, and we're going to add percentage. Oh no, we already had percentage. So we'll just do volume today. So volume today is currently, let's see, BTCT, we've got 36 million shares of volume. 36 million shares of volume. Now, this is kind of an interesting situation because on this stock, there's only 2 million shares, approximately, available to trade. And yet it has 36 million shares of volume. So what that means is that traders are trading this so actively that they're buying and selling, buying and selling, buying and selling. There's so much liquidity. People are getting in, getting out, getting in, getting out, that if everyone that was holding this, that is currently up 72%, wanted to sell, they could have all sold with that amount of volume. And even in spite of that, even in spite of potentially all of the insiders selling every share that they own, it's still holding up 72%. That's a very powerful stock. Now, the second stock I traded today, so I had 2 stocks that I traded. So the second one was, I'll get a different color pen here, was KXIN. So, and I'll go over each of these trades in more detail, but just to go high level first. So BTCT, this one was the cryptocurrency stock. It's a Chinese stock. This takes, you can see right here, CN. So this is a Chinese company. So we have the country code there. So Chinese company, KXIN. KXIN, this is a stock that is really, really quite remarkable, unbelievable. It's also Chinese, so it's also a Chinese stock. And current price, when I started trading it, was $4. Relative volume today on this one is 143. Wow, that's a lot. This one is currently up 63%. The catalyst on this is kind of interesting. It's regaining compliance, which I typically don't think is super strong catalyst, but we'll talk about that in a minute. The float on this is 687,000 shares. That is a really low float. The volume today on this currently is 44 million shares of volume. And so there's a ratio here that we could look at, which is called float rotation. Float rotation refers to the number of times the float traded hands. So here we've got float rotation of 18. So 18 times the float traded hands. Here we've got float rotation of, it's obviously over 44. It's close to, well, it's not 60. It's probably, I'm just going to do roughly 55. 55x float rotation. That means if everyone that was inside holding this stock before the move wanted to sell, they could have sold 55 times over, which is really impressive. So, and yet the stock is still holding up. So these 2 stocks clearly fit within the profile of the type of stocks that I make the most money on. So what we have here, essentially, this is the roadmap. This is the very specific outline of the type of stocks that I'm going to trade the best. So this morning when I sat down, I wasn't looking at these 2 stocks yet, but I already knew that this is where I typically am going to do the best. So now, how do I find stocks to trade each day? So let's get into the case study of today and how I made the decisions to buy the stocks I bought. So I sat down this morning, as I do every other morning, and the first thing I'm looking at are the leading percentage gainers on my scanner. Now, one of the first stocks I traded was KXIN. So KXIN popped up on my scanner right here at 7 a.m. with breaking news. It was actually, I guess it was 7:06. They put out news that they've regained compliance with NASDAQ. So they received a letter from NASDAQ regarding regaining compliance with the minimum bid price requirement. So this is good news for the company because it means they're not going to get delisted. If a company gets delisted off the exchange, they're getting moved to the OTC market, and that's not a good thing. So typically, the headline of regaining compliance, I don't pay a lot of attention to because obviously it indicates the company was out of compliance. So it's like, you know, the out of compliance was a negative. So yes, it's good that they're no longer out of compliance, but let's be realistic. That's not the most positive headline. So nonetheless, that was the headline we got. So when the stock first hit my scanner right here, it's popping up. it's popping from 280 to 310. So once it hits 310, the stock is up what? 10% on the day. So as soon as it's up 10% on the day, it starts hitting my scanner. So these scanners that I'm using are searching the market in real time for stocks that meet the criteria for me for a trade. Now, I've trained these scanners to look specifically for this. This is a software that I've built out since over the last 8 years. I've been building this software out with a development team that work for me. And so I use this software every single day. And of course, members at Warrior Trading use this software as well. It's called Day Trade Dash. So KXIN ends up hitting my scanner. And when it first hits my scanner, I see a couple of things. I check price, relative volume, percentage change, what's the catalyst, what's the float, what's the volume today, do we have float rotation yet? Now at the very beginning of the move, volume may be low and we won't have float rotation yet, but if volume is coming in, we have the potential to have both of those things going up. So when it first hits, I see it pop up, I see the news and I think, nah, I don't know. I'm not really sure about this. I'm not sure about the catalyst. It drops down here, it pulls back, and I said, of course, I live stream whenever I'm trading for members at Warrior Trading. So I'm running my live broadcast. I'm saying, all right, guys, I see it popped up, but I'm not really sure. And it's kind of, I don't know. And then all of a sudden here, it starts to move back up. Let me actually, which chart was it? Yeah, it was a 1 minute chart I was looking at. So right here, it starts to pop back up. And I said, wait 1 second. Look at the volume profile. So this now gets into a little bit of technical analysis and how to read candlestick charts. I have a number of other episodes that cover this topic if you want to check them out. So I see the first 2 candles are green, and noteworthy is that they have higher volume than the red candles. So what that tells us is that there was more accumulation here than distribution. There was more stock that was bought than was sold. So my immediate reaction when I saw that was, as it started to pop back up here, was wait, the volume profile is actually good, which is surprising because this isn't the strongest news catalyst, but it's a good volume profile. So as it pops up to 4, I take my first entry right here for the break of $4. It squeezes up almost immediately to $5 a share and hits a high of $5.43. From $4 to $5.43. Now, the reason I bought at $4 is because one of the patterns that I've noticed, and this is getting into technical analysis, is that a lot of stocks will have a little bit of resistance as they approach $0.50 and whole dollars. So 4, 4.50, 5, 5.56. So I often like to get in right as these levels break. And so we hit 4, we pulled back just for a moment, and then we broke through that resistance. And at that point, it actually went right through the 450 resistance, right through 5, and all the way to 550 just about, which was a pretty impressive move. Now let's jump back onto the slide deck just for a second, because I want to make sure we're in the same place, on the same page here. So I'm going to pull the slides up. Here we go. Now, so step 1 is, of course, to find the stock that is moving. But in order to use your stock scanners, you got to make sure you understand the right type of stock to look for, which, of course, I do. So I've got my scanners programmed. I get the alert on KXIN. It pops up, and I've got to, of course, be able to understand the skills required to just get through that first step. I want you to understand this. So number 1, you've got to know how to use the stock scanners. You got to know the type of stocks that have the potential to make big moves and the type of stocks to avoid. We want to avoid typically stocks that have higher floats, that are higher priced. I also typically avoid penny stocks. I try to avoid stocks that are easy to borrow. They're just certain types of stocks that I know will be more difficult to trade, and I avoid them completely. This is part of the kind of educated intuition that comes with years of experience in the market. So then step 2 is trying to understand why the stock is moving. And I already talked about this a little bit with KXIN. I saw the news headline right here in the news window. And so for KXIN, it was showing me that they regained compliance. This was the news that came out at 7:06 a.m. And again, I didn't think it was a very good catalyst, but I tried not to be biased. I said, look, if the volume profile looks good, I like it. Now, in order to understand step 2, you've got to be able to understand the different types of news headlines. So I instinctively knew that a headline about regaining compliance, not the strongest headline. You've got to also be able to separate the logic of the news from the price action. Sometimes, for instance, you'll see a headline that maybe sounds really good, and yet the price goes down. And you get kind of a bias. You get kind of stubborn. You say, no, the news is good. But why is the price going down then? Well, maybe, for instance, just to give you an example, maybe the company put out news that this was going to happen a couple months ago, and now the news that it's actually happening is more of, it was buy the rumor, sell the news. Maybe there's a rumor, maybe there's actually news, and now the news is they're coming out, but it's not as good as what they had projected a few months ago, right? So you can have earnings, for instance, that are good, but they're not as good as what was projected, and the price goes down. And it feels kind of confusing, but you've got to remember that the market has a very short outlook, 3 months, 6 months in the future. So even if the news appears good, if it's not as good as what was projected, or it's not as good as what people are hoping for, then all of a sudden you can see a divergence where what seemingly is good news results in the price going down. You've also got to be able to understand fundamental analysis in general and SEC filings. And this means being able to read the balance sheet of a company, being able to see what their profit is, being able to see how much debt they're carrying, how much cash they have on the books, because this ties into number 4, the ability to understand secondary offering risk. Now, all the things that I'm sharing with you, these sort of additional skills, which I'm not getting into in this episode, these are all things that I teach in my classes at Warrior Trading for those that are interested. In fact, if you want to watch a free day trading course that I taught, I will put a link and I'll pin it to the top of the comments, and I'll link in the description where you can watch it. I will also put a link there where you could do a 2-week trial at Warrior Trading, and you could watch over my shoulder with my live broadcast using the same scanners, the same charts, the same news feed that I'm using every single day. So for beginners, you may just want to start by watching the free day trading course that I've taught. And for traders who've been doing this for a little while and want to jump in, then give the 2-week trial a test drive and see what it's like for you. All right, so then step 3 is getting into technical analysis, where I'm actually reading the candlestick charts, and that's where I was doing analyzing the volume profile. So I'm looking at the volume bars. I am using some basic technical indicators like moving averages. I'm using the 9, the 20, the 200, using the volume weight average price, using the MACD, moving average convergence divergence indicator, and using volume bars. But for the most part, I keep it simple. These charts don't look complicated because what I want to be able to see are the candlesticks. The candlesticks themselves are communicating the sentiment. Candlestick charts are the language of the financial markets. And what's really amazing about these charts is that inside those charts are buy and sell signals. Now, if you haven't yet learned to see those, you don't see them yet, it's just because you're not yet fluent in this language of financial analysis, but a technical analysis and the financial markets. But the more you practice, the better you'll get at it. And one of the things I'd say, like learning a language, is the more you immerse yourself in watching as many of my episodes here on YouTube as possible, the better you'll get at picking up on these subtle hints and clues that the charts are giving us. Ultimately, the traders who make the most money are the traders who are able to see into the future. This is kind of an interesting thing about doing technical analysis. We see part of a pattern forming, and now we have to make a prediction about what's going to happen next, right? So trading, a large part of it is pattern recognition, recognizing that when this happens, this follows. So in order to read candlestick charts and perform your technical analysis, you've got to understand the different candlestick shapes, the patterns, the technical indicators, how to read support and resistance, and how to see those buy and sell signals that are plain as day right there on the chart waiting for you. Step 4 is where I'm actually executing the trades. Now, one of the things that I do for my members at Warrior Trading is I upload a lot of live trading archives. These live trading archives are the recordings of my actual trades where you can see me getting in and getting out. So for instance, today, let's see if I can find a good trade. Okay, that took a second, but here we go. So this is from today. So now we're going to kind of transition into me going over my actual trades today and walking you through how this fits within my strategy in the five steps, which is stock selection, fundamental analysis, technical analysis, executing the trade, and then step 5 will be analyzing the metrics. So I want to walk you through the trades from today, as these are sort of a case study demonstrating my strategy and the way I trade it every single day. So let's go ahead and jump into here. Now, again, like I said, these are live trading archives that are really reserved for members at Warrior Trading. But what I want to show you here, just sort of for a second, is the execution of the trade, which is something I'm doing inside my trading platform. So this is actually spanning across two monitors right here. This is monitor number 1, and this is monitor number 2. Or actually, this one's number 1, this one's number 2, but it doesn't really matter. So the bottom monitor here has my actual trading software on it. And this is where I'm actually pressing the buy and sell button. So I've got my buy and sell buttons. I have my depth of market, which is my level 2, my time in sales. You can see how it's moving. It's active. This is where we're seeing really the stock, the quotes and the price moving in real time. And I use this and depend on this a lot for my trading. So in order to really be a good trader, you've got to make sure as part of step 4 that you're able to use trading software with hotkeys, preferably. You can read level 2 and do tape reading to see those buy and sell signals, that you've got fast reaction speed, that's hand-eye coordination, and you've got an efficient order execution system, which is a combination of the broker that you're using, but also the way you're actually executing the orders with your buttons and sort of your individual workflow. So this trade on BTCT, at this point in the day, you can see I'm sitting up $43,000 on the day. And this is actually where things started to get exciting. So I want to zoom in to this area right here. So let's pull up the chart and I can get it a little bit bigger for you. All right, so we're going to go to BTCT here. So I'm going to do the 1 minute chart. Now, the way I've got this all laid out here is 10 second, 1 minute, 5 minute, daily chart, my news feed, and my scanners. This is this second monitor right here. And the one just below it is my trading monitor right down here. So this slides down here and this stays up here. All right, so BTCT, the spot where I really got excited about this was kind of right in here. And actually, I think I should do a 10-second chart on this. I think you're going to be able to see it a little bit easier. I like the 10-second chart because a 10-second chart will break down each 1 minute candle into its 10-second, 6 10-second candles. So you can kind of break it down a little bit further. So this is where things started to get kind of exciting for me on BTCT. So, by the way, just a high level, when BTCT hit my scanners this morning, what was my thought process? On KXIN, I think I already walked you through that one. KXIN, that one hits my scanners, and initially I'm like, okay, it's spiking up on breaking news. I understand very quickly the catalyst on this one, breaking news. I didn't think the news was that great, but the volume profile supported a trade. Light volume selling, high volume buying. So I took this trade right here on the break of 4 and it goes immediately 450 up to 5. Awesome trade. Pulls back and then right here took this trade. Boom, break of 5 all the way up to 6. What was interesting about this stock was we had these bursts of volume, and then it would kind of slow down. So, and I didn't trade it in this area at all. So I got these trades here on this one, really just very straightforward trading on the pullbacks off of the volume weighted average price and the break through the high right there. So that was a high day break at the $0.50 whole dollar of 4, entry at 4, stop at 390, adding at 450, taking profit as it broke through 5. Nice clean trade. This inverted head and shoulders, that's technical pattern, entry right here. For those of you guys that some of this is a little bit above your head, you're not familiar with some of these patterns, this again is the stuff that I teach in our classes. So I encourage you to check out my free day trading course or do a 2-week trial at Warrior Trading if you've got more experience and you want to just kind of dive right in. So anyways, that was KXIN, fairly straightforward. When BTCT hit the scan, this was a little different because I knew this one had made this huge move in the previous session. And of course, I missed it because of my bias. I said, you know what? It's a Bitcoin stock. I don't think I should trade it. I don't usually do well on these. And it ends up making this, huge move. And I missed the whole thing. So, all right, I can admit when I was wrong. I should have probably traded that. It was a really nice move. So today, when it starts popping up this morning, I said, all right, the high is 12 back up here. And this is what I do. Let me get my drawing tool. So I mark out the previous pre-market high, which was 1174, just under 12. And I saw a couple other traders mentioning it was popping up. SJ is a member of the community. He has his $2 million badge, $2 million verified profit. He said when this was at about 950, he said, I'm watching this for a possible trade in the break of 10. And that must have been right about here. So I saw it and I was like, I see it. You're not wrong. I mean, it's a good looking setup, but sometimes a stock that made a really big move in the previous session, it's hard for the second day for it to make an even bigger move. It's just kind of like, it's just, the second day is always in the shadow of that first day, and it didn't have fresh news. But remember, this was a little bit different. What was the catalyst behind this stock making such a big move? Bitcoin. So when I saw it starting to squeeze up here, I thought, all right, look at this. There it goes up to 1050. Son of a gun, nice move, nice move. It pulls back. It comes back up right here up to 11. Now, you know what I did? First trade on this stock. My first trade, I bought it right here as it broke through 1050. It goes up to 1079. It drops down. I lost $2,000 on it. Now, that's within my risk tolerance. It's not an unacceptable loss. But I'll tell you something, when you get kicked off the horse, sometimes you jump back up swinging hard. And that's usually the case for me. In fact, my biggest green day of all time, I went red $25,000 on the day. I got kicked down and I came back up swinging. I ended up finishing the day up almost $500,000 in one day. And if I hadn't gotten knocked down, I probably wouldn't have been trading so aggressively. So there's kind of an interesting thing that happens psychologically when you get kicked down. So this stock first kicks me in the teeth. I get knocked down, I lose $2,000. And when it comes back up, I was like, you son of a gun, you got me that one time, but I'm getting you back. And I got back in this thing. It goes up to 11, does a micro pullback, next target 1174. It hits 1174 and I make about $5,000. I go, well, 7,000. I went from down 2,000 to up 5,000 on the stock. Then it does a little micro pullback here, goes up to 1250. Boom. I get a couple trades on that. Next thing you know, pulls back. And right in this area, this is where it started to get interesting. Okay, so this is the area that we're going to get on the 10-second chart. Before we get on the 10-second chart, I'm just going to zoom out and show you a couple of levels from yesterday. These are technical levels. Yesterday's high was $17 a share, so that was a big line in the sand, and we also had this pivot right here at about 14. So a couple of technical levels of resistance. So on the 10-second chart, this comes up right in this area. And I'll actually show you the live trade on this one too. So right here, it pops up and it goes up to 1268. It pulls back. It rallies back up. And right in here, I was like, okay, are we going to go? And then it sort of stalls out. It comes back up again right here to 13. And I said, okay, clearly we have, see it false breaks here. I said, clearly we've got some resistance at the previous high, which is 1268. It breaks over it right here. And this was the moment of truth right in here. What was happening right here? What signal is this telling me? Now, remember, I already know I like this stock. The stock meets my criteria for stock selection. Everything there is awesome. The stock is fine. I pull up the chart on Bitcoin. So I get the chart of Bitcoin up, which normally I wouldn't use, but in this case, I knew that was the catalyst. So this is a little bit like trading a derivative. When you're trading a derivative, the value of what you're trading is based on the underlying value of something else. And the something else in this case was Bitcoin. So I have the chart up on Bitcoin right here. And I knew that the all-time high on Bitcoin was right here, the high of this level, which was about 90,750 or something. So I knew that was the high. And it popped up right here. It was just under the high. And I was like, boy, man, this thing, if we time this right, and I don't know if we will, but if we time this right, we might end up getting a trade on this stock right as Bitcoin is making a new high, a new all-time high. Went up to 94,000 today. All right, so what's happening? That's going up. I'm pulling up the chart right here. This pops up to 13. It's holding 13, and I'm like, you know what? It's game time. It's time to step up to the plate. So I have my charts up right here. I'm already green on BTCT, not by a lot though. You can see I'm up $5,000 on it. This is the live trading archive, typically reserved just for Warrior Pro members. So I'm just going to give you a sneak preview of this. So as it comes up here, I decide to jump in this, and I'm going to jump in for the break over 13. So I'm going to back this up. So I take 7,500 shares. That's 7,500 shares of this stock in at 12.89, and I'm looking for the break through 13. It breaks, it's at 13 right now on the ask. Now, what I'm looking at when I'm saying this is I'm looking at the level 2. So this is the ask and this is the bid, right? And this is the time and sales. These are all of the orders going through the market. So I'm looking for the breakthrough 13. We've got 12.99 on the ask. And oops, so back that up. Sorry, that broke. It breaks so fast when it breaks. So we're in this tight little zone here. There's 13.10. And the second it breaks through 13, you want to know what I do? I step up to the plate and I say, I like this stock. If it's breaking 13, the next target on this, psychological resistance 1350, then we're looking for 1390. 1390 was that little pivot from yesterday. And if we can get over 1390, next level is 17. So I add right here. Now I've got 16,000 shares in at 1303. We've got a high now of 1330. And I'm looking for the breakthrough 1350. We go immediately to 1356. This is very strong. This is very strong. So 1356, I add another 3,000 or 4,000 shares. Now I've got nearly 20,000 shares. I'm looking for 14. Watching 1365 and 75, and I add again, looking for the break of 14. There's $14 on the ask, $14.19 on the ask. I'm up right now, $18,000, $20,000 sitting right now, unrealized profit. I'm looking for that pop through 14, $22,983.49. Now I took that trade with 28,000 shares. Is that a big position? Certainly, it's a big position. Does it take some confidence to take that type of trade? Absolutely. But remember, back on the whiteboard, what were we talking about before? We were talking about, and let me get it in focus. We were talking about scaling up. So initially, 10-cent trades with, 100 shares, you're doing $10 a day. Now in this one, I've gone all the way up to a 28,000 share position. And on this one, because I already have a profit cushion on the day, I'm already up 43,000 on the day. See, now this is where I'm in the driver's seat. I'm in the driver's seat. I'm in a position of real strength here. I've got so much profit on the day that I could now hold this with a stop at break even and just see what it wants to do. And this was the moment that I knew that today had the potential to be a $100,000 day. So I end up getting a couple of really nice trades here as it breaks through this level. So I booked some profit. Now let's go to the next trade. Let's back it up for 1 second. So I booked some profit, and then let's watch this next trade. So I'm up 77,000 on the day right here. And now watch this break of 16. We go up to 17. We go up to $17 right here on the level 2, 17. Now we're showing 17.25. And this was exciting because right here, we're up 63% on the day. Bitcoin is making a new all-time high. This is at 9:15. So Bitcoin is making a new all-time high. This is right here on the chart, right? It's right about, it was like, actually, I guess it was right. Yeah, it was like right here. And all of a sudden, right at 9:30, Bitcoin pulls away. So this goes from 17, breaking yesterday's high. And what I thought to myself is, what's the signal? If I was a short seller, where would I bail? Breaking yesterday's high, because that's showing real strong, really strong strength. So all of a sudden, it breaks yesterday's high, and watch this. It goes from 17, I add right here. Where is it? I add right there, 1720. It goes 1750, 1775, 18, coming up, 1898 on the ask. We just went all the way to $18.98, $19 on the ask, $20.41 on the ask. Now I'm up an additional unrealized $24,366. This is when things get pretty intense. This was a wild trade. I mean, the momentum was just unbelievable. It goes straight here from $12 up to 16, and then boom, all the way up to $21 a share. Now at the open, I got some more trades. It ended up hitting a high today of $26.58. Now it dropped hard. It did drop hard, and I actually gave back a little profit off the top. I went from a high of about 67,000 to 61,000. I gave back a little profit off the top. I overstayed my welcome on it a little bit. But here's something I usually say about trading. If I'm not pushing it and giving back a little profit, then, well, I probably wasn't pushing myself hard enough. In order to scale your trading and in order to grow as a trader, you have to trade at the edge of your comfort zone. And look, there are markets where you don't want to push the edge of your comfort zone because you're just going to get punished. The market's really choppy. But when you're seeing other traders doing really well, when you're seeing stocks back to back going up 50%, 100%, 200%, if there was ever a time to be aggressive, that's the time to be aggressive. So this is how I kind of approach trading each day. I figure, I start the day each day at 0. I'm a day trader. I don't carry any positions in from the previous day. So I start each day at 0. Now today, first trade of the day, I go red, $1,600, 1.6K. Again, kicked in the teeth a little bit, rallied back real quick, and got myself up about, what was it? I guess I've got to scale this a bit better, but got myself up about 10,000 on XK or KXIN. From there, I continued trading it until I was up about $42,000. And then I kind of went sideways for a little bit. And during this time, I was just waiting for another stock. We got another stock that popped up all of a sudden, BTCT, first trade on it, I go red. Now, some people would say, should have walked away right there. You're down 2,000 off the top. I would say generally, hard stop, have to walk away if I give back half of my profit. So if I give back half of my profit, I have to walk away. But if I give back only 10% or 15%, that's okay. There's nothing wrong with that. That's healthy. And what ended up happening here today is I took that trade, and the next thing you know, it set up another really good opportunity. And just like that, I go up about 100K on the day. Peaked today at about 103,000 and gave back about 15% off the top, down to 85,000, and then rallied back up to 100 and said that is good. So generally, kind of the way I approach this is I figure the right time to walk away is after I've given back, about 10 to 15%, 20% off the top, right? Especially if I'm coming to the end of my time of day when I typically trade the best. Starting at 7 a.m. Eastern Standard Time and ending for me generally hard stop by 12 p.m. Last trades today were around, it was somewhere around 10:15 or something like that. So 10:15 a.m. So that's when I'm like, all right, you know what? We're kind of coming to the end of the window. I've given back a little off the top. If I have a little pullback here, because it's still so early in the day, usually I figure as long as I haven't given back half, I'll probably still have time for recovery. Again, a little pullback, okay. But then once we start to get to the end of the window, or I've kind of had 2 little steps down like this, that's when I'm thinking, all right, it's time to step back. One of the things I tell my boys, I've got 2 boys, and we go skiing a lot, and I tell them, look, fellas, if you're not falling down, you're not pushing yourself hard enough. There's nothing wrong with falling down. We all fall down. We all get, banged around sometimes, and that's part of the fun. You've got to push yourself. Now, we do things to make sure we stay safe. We wear a helmet, of course the snow is nice and soft. We make sure we're not flying into trees or going way beyond our skill level. So when it comes to trading, it's okay to have losses. It's okay to take risk and to push yourself. You just keep those guardrails on. You don't let yourself short a stock on margin and potentially blow up your account. You don't take unsustainable positions that have the potential of blowing up your account or ending your career. Because one thing I'll say is that you never want to take a trade that has the potential to end this pursuit of trading. And that's something that I've seen with short sellers. You think about someone who's shorting a stock like BTCT, and all of a sudden this thing goes from, they're short at $10 a share thinking it's going to reverse. And next thing you know, it's at 12, it's at 15, it's at 20. Think about the times that we have seen stocks like this go to $30 a share, to 40, to 50, to 60, to 70, to 80, to $100 a share, right? They start going like that. And all of a sudden, in one trade, a short seller could lose their entire career. I've seen it happen before. Now, this is specifically with shorting stocks. It's one of the riskiest things you can do. Shorting stocks and going YOLO on options. Those are like the 2 riskiest things you could do in the market. Not to say that my strategy doesn't carry risk, because anything that's in the market carries risk. But there are areas in the market that relatively are a lot higher risk, and there's areas that are lower risk. So my focus is to trade at the edge of my comfort zone, to step up, to trade with bigger size when the market's hot, but keep it within reason. And I encourage you guys to think the same way. I hope you do. And always to practice these new strategies that you're learning in a safe, simulated environment. That's the right way to get started. I've seen so many traders come in, they go hot with real money, maybe in a hot market, they make some nice profits, but it's beginner's luck. It runs out. And then next thing you know, they take a huge loss and they're blown out, they're gone. I don't want to see that happen to you, right? So I want to remind you, the market's going to be here. Right now, your job is to build your educated intuition, to gain experience, to practice every single day in the simulator, to focus on locking up those 10-cent base 10-cent base hit trades, right? 10 cents a share, 15, 20 cents a share, whatever it is. Base hit, base hit, base hit, base hit. Build consistency. That's what it's all about. If you guys enjoyed this episode, I hope you hit the thumbs up. I hope you are subscribed to the channel. And if you want to check out my free day trading course, I've got a 90-minute course I think you guys would love. That goes over my strategy in more detail. So I'll put a link in the top of the comments in the description where you can check that out. And if you want to do a 2-week trial at Warrior Trading, if you're a more experienced trader and you're ready to jump right in, get your hands dirty and start practicing, I'd love to have you join us. I'll be live streaming. I stream every morning, Monday through Friday. I'd love to see you guys in the chat room tomorrow. I'll be live streaming. During your 2-week trial, you'll have access to this platform right here. You'll be able to use the same scanners that I use every single day, the same charts, the news feed. You'll be able to see the chat room where you'll be able to see the badge holders talking. You'll be able to watch over my shoulder, listen to my broadcast, and hear my market commentary. And I'll remind you, as always, you shouldn't try to blindly follow me or anyone else. You've got to practice in the simulator. You've got to pay your dues and take it slow. But when I stream, it's me putting my strategies on display, showing you these strategies in real time, both the winners and the losers, and how it plays out. So everyone tuned in today, they saw me hit some really nice winners. They saw me catch a couple of bigger losses, but I finished the day in the green, $176.35. And if you could, if I could time travel back, to when I was getting started, I don't know that I would have believed that this much money could be made in one day. It's the power of the market is really unbelievable, especially when the market starts to get hot. Now, I'll also say, in full disclosure, just this last month, in the last 30 days, I've made more than I made trading all of last year. Last year, the market was cold. Now, I still had a good year. 6 figures is a solid year. I didn't make $1 million, though. It wasn't a great year. This year is a great year. And I have the hope that next year will also be a great year because we're definitely seeing the market picking back up. So the market goes in these ebbs and flows, and you've got to be able to ride those waves. So when you have those big green days, you want to remind yourself that this profit's going to have to tide me over during the inevitable slow period that comes. When it's hot, it feels like it's never going to get cold. And when it's cold, it feels like it's never going to get hot again, but it always does. It's the ebb and the flow of the market. You just got to ride those waves and go with the flow. Thanks as always for tuning in. Hope you hit that thumbs up. Hope you subscribe to the channel. And I'll remind you as always, trading is risky and my results aren't typical. So please take it slow. And I'll see you guys hopefully in the chat room tomorrow morning.